All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session, and we're going to go ahead and get started on analysis this morning. So first and foremost, I think we have to just keep in mind that, you look at like currencies like the euro. Yeah, we gapped a little lower at the open, but basically we're holding support. And that's the thing that we have to just keep in mind. We are holding support for now. I don't really count that gap lower as that was as a gap, and we just kind of filled it real quick. I don't even think that brokers have really had their prices, really all adjusted for that gap, so I wouldn't be too worried about that right now. What I would be looking for at this point is to see if we create new lows in like the North American session. So that means, we'd have to see a push lower in the euro below like 117.50, something like that. I think that would be pretty key. So I'm going to write down a couple of levels with the euro. 117.10, 117.50, and then resistance. I mean, if we squeeze a little bit, obviously we're in tight ranges right now. I would think that this, I know that we have a spike low around here, but probably this level, because this is like the previous trend line, this previous support should act as resistance today. So I'm going to, I don't even know if I really want to mark that up. Actually, I'm gonna give it all the way back to like 118 and change. Let's get rid of this descending channel, because that descending channel doesn't I don't think that really matters at the moment. So what I would be looking for is maybe a move back towards 118 15, somewhere around here, 118.20. I don't know. It's going to be, it's a tough call, because that was obviously a very big move on Friday. So, all that, that entire move, I don't know if I would expect a complete retracement of that entire move, so I think that if we get a bounce back, we might recover some of that lost ground, but I'm going to write down 118 today. It's not major support or major resistance, excuse me, but it's resistance. And we are on the verge of flipping this to bearish, especially if we close below 1750 today. All right, if we close below 117.50 today, I wouldn't want to be bullish the euro. Let's go over to the sterling. Sterling's still holding in this, what I still consider as a flag pattern. So we have to hold above 138.30. I know we've written down that number a lot, but that number still remains important. It's a 38% retracement. And I'm going to write 138.35. Resistance, 139.15 to the top of the flag. Aussie dollar, support, hold on really quick. I was redrawing this flag pattern, which I still believe that as long as we're below 74.20, it's bearish. So that hasn't changed. Support, let's take a look at that. Well, hold on, let me draw something out. So the 78% retracement lines up with that spike low. So I'm going to write down 73.20 is going to be support. If we start trading back below there, that means that bear flag is on the move. Kiwi, 71 cents, obviously. And that 50% retracement is holding that 69.80. So 71 cents, 69.80, and there's nothing to do. Dollar CAD. You know, with crude oil bouncing back today, and by the way, you know, I know I said it in the chat rooms, crude is bouncing off of that support, but we should find some resistance up here about, I mean, we've already bounced $1.50 or $1.20 since I sent out that update this morning. And in the chat rooms too. I mentioned in the chat rooms, I actually mentioned it in the Forex Flow live room. Just, you know, like the risk reward is for longs down here. And I'm surprised it hasn't actually weighed on the Norwegian krone or the Canadian dollar any. But if we get up here and the dollar Canadian hasn't gone down, then that's something that you have to think about. All right, so first of all, here, this is triangle support. It's broken triangle resistance that's Friday. Now we're just finding support here. So that means we should actually have some pretty key support right through here at 125. Let's just call it 125.10. Resistance 125.90, but that's also the 200-day moving average. So 125.90 is key. Here's the dollar Swiss. So we are up against channel resistance. Like I said last week, you know, when we were down here below the 200-day moving average, if we broke back above 90.70, it would be a squeeze. We are squeezing. Now, I figured we could go back to channel resistance, which was 91.60, 91.70, but the trend line is descending. So here we are right basically at channel resistance. I don't know if I have the stomach to be shorting it here. But I would say that resistance now, I mean, if we break today's highs, which, I mean, we're right on it. I mean, the next level of resistance is going to be right here. So $618 retracements at 91.80. So let's write that 91.80, then 92.30, which 92.22 is a 78% retracement. So 92.30. Support 90.80 now on dips. Now remember, we had 90, we were looking at 90, we might have said 90.80. Oops. Support being 90.75. Okay. So now it's like 90. Well, we could write 90.75, 90.80. It's all the same because that's the 200-day moving average now. US dollar, Norwegian krona. Resistance is at 8.95. Support is any dip now back to 8.85 because that was resistance before. So 8.85, 8.95. This is still bullish. US dollar, Mexican peso. We are now above that, that 20 resistance. This should actually be support today, is at 20, but these are all the levels we've been writing down, right? So you have 20 here, then you have 2020. This is the 200-day moving average, right? 2015, then, which I'm going to write that down today, 2015, but support today, let's just assume we drop below 20. So support's going to be right here at 1990. So I'm going to go 1970, which is key support, right? 1990. Then resistance is 2015, which is the 200-day moving average. Then 2025, which is right here, right? So those are your levels with the dollar max. Dollar yen, this will be support here in the dollar yen, 1990, and then resistance is at well, I would say it's up here at the 618, which is right here, that high at 110.60. We are in a range. Dollar index. I was redrawing everything while we're on the morning edge today, which again, I have to reiterate that we're challenging what I think is triangle resistance, and any break above like this trend high is super bullish. So I'm going to mark up today's resistance as, or today's highs as resistance. Well, basically 93. I mean, because this is the 78% retracement. So I'll write down 92, 92, which is today's highs. Then beyond that, we have 93.20, obviously. Oops. Support today should be any dip to 92.35. Like if we get some proper pullback, 92.35 should be support. We talked about gold on the webinar. And I think that, and you know, I actually have these levels marked up right now. So I'm going to write down 1755 as a upside breakout point. So that's pretty much key. That's got to hold to keep us bearish. A break below 1735 would be bearish. I mean, we're already bearish, but a move below 1735, and we're then, you know, targeting back towards 1700, I think. Silver. Now, this I was surprised about. Well, I mean, I'm not surprised because we were holding this channel support going into Friday, right? Which didn't surprise me. I'm like, okay, well, that's channel support. We've been watching it. And then obviously Sunday, you know, the break now. So that means while we're below 24.15, it's bearish. You know, silver had been holding up much better than gold, but you know, now this is 161% extension of this move comes in at 23.55. We're holding well above that right now. So I think that should hold dips. Okay. Bitcoin, which is the anti-precious metals, as you guys know, Bitcoin's bullish. I mean, we're above the 200-day moving average. Once we broke above 42,500 last week, I mean, that was, remember, we were neutral. And I mean, it's bullish till we get to the 618 retracement. So now, while we're above 42,500, I think you have to stay bullish to target 4830 or 48,300. And S&P, it's easy. Numbers are the same, 43.75. This is support. While we're above that, you stay bullish. I know we keep brushing our head up against 44.40. After that is 44.95, which is the 161% extension. Nothing's changed here, guys. I don't have to, you know, continue to look at this chart and go over the analysis process. This is the top of the wedge. While we're above here, we're bullish. Yes, everything's divergent, but you know what? Relative strength has been divergent through this whole move. So you know, I don't know how that changes anything. So that's it. Bias chart is done. So I'm going to pass it over to Steve and Stelios. I need to go ahead and get ready for the day. So, all right. Thanks, Stelios and Steve. I'll let you guys take over from here.
Thank you, Blake.
Thank you.
Can you hear me? By the way, I have new headphones because the other ones I had are busted.
Really?
Yeah. No, these were earphones. They were old, so I switched them. That's why I had problems before. The mic wasn't working. Anyway, let me just post this and we can get cracking. Okay, I have a few things. Let me just hold on. Let me just post the bias chart and submit. Go on. So it was an interesting start to the week. We obviously had the big move in metals. I'm going to start with the yields first because we talked about them on FACE and I didn't have the time to give my opinion. I remain of the same view that as long as yields are down here, I really don't see how anything can change in risk assets. Obviously, there can be black swan events or something. We had the coronavirus last year. You can have all sorts of things, but as long as yields are low, there's going to be it's going to be very easy to leverage, to borrow, and to risk. And this is what's been happening for years and years. Now, I'm not saying that we can't see a pullback, for the 2, 3, 5, 10%, maybe, everything can happen. But for a proper move, as long as this ample liquidity is available to everybody and the search for yield is strong and everybody tries to find a way to make money, I think risk assets are going to be bid. And you can see this trend by seeing all these crazy things like NFTs of this and that, fetching ridiculous amounts of money.
The usual.
Did you hear about Steve Jobs' first job application? Did you hear about that?
No,
the first job application he wrote by hand is available. It's a piece of paper, and it's been sold a few times over the past years. And it was on auction as a physical piece of paper and also as an NFT. Now, I personally don't understand what the NFT of the physical paper means, but the physical piece of paper sold for, I think, $350,000 or whatever. But somebody actually paid, I think it was 10 grand for the NFT of something that actually exists. Now, I get it when something is digital, in digital form only, and you own this thing, even though other people can access it and view it on their laptops or wherever. But this is an actual physical thing that somebody owns. You don't have it. Anyway, I'm not going to get into that conversation.
It makes no sense.
It doesn't make any sense to me, but it just shows that people want to find ways to make money. We need to make money. Oh, yes, and fast. And, the younger generation, they see cryptos and all the other stuff, and they go, wow, you can make, 15% in a day. Yeah, you FX people, you're stupid. You try to make 0.5% and you think you've done something. But anyway, all I'm saying is that with rates where they are now, people are going to borrow, people are going to risk because it costs a lot less to risk these days. So that's my view on yields. As long as yields remain here, and when I say here, I mean the 10-year US really has to get to like 2% for markets to start worrying, and 2% is still very, very low historically, right? I mean, ridiculously low, extremely low, especially with inflation here. So what are the markets telling us? We see these moves overnight. What are the markets telling us? Yields are not doing anything in the grand scheme of things. Equities are not doing anything. So really, the markets are telling us that we believe the Fed, we believe Jerome Powell, this inflation thing is going to go away and it's going to be over and we're going to be back to normal. Everything's going to be great. I disagree with that, but that's what the market is telling us. That's how I read it. And
either that or that they believe that the response is going to be
low,
strong, and yield the proper results.
Yes.
I don't believe in either of the two scenarios. As simple as that.
Yeah. Or the response might be not enough by the Fed, because, the Fed, what do they want to do? They do not want to unsettle markets. They don't want to cause a crash. And even though they say that they don't think that low rates are the cause of, equities being up here, they know it's the reason. So what are they going to do? Are they going to hike, taper and hike and all that? They know that equities are going to drop quite a bit if they do that. And I'm sure they don't want to do that. It's costly, political cost. So I think they're gonna prepare us for some tapering on the Jackson Hole Symposium. But what is the rate of tapering going to be? It's one thing to taper, and it's one thing to taper properly. So we have to wait for all that. But for me, the move that we saw in metals overnight, it just reinforces what we've been saying for a while. We've been saying that, look, I think that in the medium term, metals should be very, very bullish. This is economics 101 and mathematics 101. Of course, it doesn't always apply. In the short term, anything can happen. But for me, they're very, very bullish. But we've been saying that in the short term, we thought, and we said this on Friday and on Thursday, we thought that metals are trading very heavy. They look weak, and that it's not a good idea to try and, until at least this technical structure plays out, it's probably not a good idea to start to get long. And look what happened overnight on the most illiquid time of the day. They really tried hard, and they smacked it pretty hard, and they've had the result. And I mean, we bounced, but I still think that they're both weak. And in gold and silver, I was talking to a friend of mine who said, where do we buy? I said, look, I'm already a little bit long, and I'm quite deeply out of the money now, but I want to get a lot longer. And I said to him, I think 16.90 gold is probably a nice level. It might get a lot lower than that. I don't know. But for me, as technical levels, I like that. I like 22. There's a really nice confluence of supports in silver. It's actually quite low, like 22.30-ish. So I'm going to wait. I'm going to be patient. I'm going to wait. I'm unleveraged, and I'm going to load up if we hit higher levels. Now, the other alternative is we bounce and we just don't look back. If that happens, then I'm going to be adding, but simply at higher levels.
Elio, as I said before to Dale, today's move makes me a little bit skeptical because it's not going to be the first time that we can end up seeing a move such like this one, indicating a bottom or a top in other cases. You know what I mean?
Yeah.
And especially in silver, we sliced through this descending channel with this move. We sliced through the long-term symmetrical triangle.
Yeah.
And now we've retraced like 70-80% of the move lower already. Now we end up closing more or less unchanged or something. I'm going to seriously start thinking that this weird move might have indicated the bottom.
Yeah, it could be. I mean, like you said, we've seen these kind of sudden and exhaustive moves, right? You take out all the stops, and and then the market just then gets the other way, and it just goes. It could be a reversal, but I'm not 100% sure yet. Not even 80% sure of that yet. I want to see more price action. And what I really like with this trade and with the way I trade it, because I'm not a day trader, I'm not a scalper, I like to accumulate. What I like with this trade is that I know that eventually we're going a lot higher. Unless they mine an asteroid with trillions of dollars worth of silver on it, there's no way mathematically and with fundamentals that this cannot go a lot higher. So the question is, how much lower can I get long? How much lower can I get my average? And that's the thing. And remember, I've said this before for people who haven't been around that long. Last time I was long silver, I was long just under $15, and I was talking about this in the chat room and on Face and here on the webinars. And it took 18 months of nothing, and it's just going sideways. Then COVID hit, and I was down about 10-15% on the position. I should have added more, but I didn't. And then I kept it, and then we got to 20. I got out at like $25.5. So from 15, just under 15, 25.5 in 18 months or whatever it was. It takes a while for these moves to
trade,
run.
Yes,
it is a good trade, but if you're a day trader, or if you need a monthly P&L to live off, then it's very difficult to trade like this. I'm fortunate enough to be in the position where I can actually run these positions and not get stopped out and not get psychologically stressed about it. So and I love that. But that's me. A lot of people cannot do that. So
yeah, that's me as well. I mean, I don't want to be awake at night, looking at what's happening to my short-term positions. Yeah. I find medium-term type of trading much more satisfying and easier to do than the very short-term type of trading.
Yeah, and it's could potentially your returns could be lower than if you're scalping all day long, but you have to be a really good scalper, right? So
as Dale has been saying, there are 1,000 ways to skin a cat.
Exactly,
and there are people that make very good return scalping, but that's not the type of trading I like or you like.
Yeah, and I think this is something for people who listen to us. This is something that I really like with ForexAnalytix and now with Ryan and everything, is that you have all these different people trading in 100 different ways. You take what you like, you try what you like, and then you decide what suits you. And that's that's what I did as well. And I've said this so many times. I used to be a market maker. I did like 100 trades a day, huge size and everything. And then I switched completely because the circumstances changed, and I was not comfortable at all. So you have to figure out what works for you. And like you said, Steve, very correctly, if you sleep at night okay with your positions, you're doing it right. End of story.
Indeed. That's all that matters.
Exactly.
That's all that matters.
Either that or you're getting some really strong sleeping pills. Yeah.
Okay, so we
Anyway.
also had, by the way, a continuation lower in the crude oil move, which I think is, of course, uncorrelated to gold. We broke through this trend line support, but as I wrote in the weekend analysis, there are two types of patterns we can be looking at here. One of them was this symmetrical triangle, and the other one was a channel, in which case, channel trend line support passes from like just above $63. So far, the move lower in crude is orderly. If we slice through $63 and accelerate, then I'm going to be looking for a much, much deeper corrective move in crude oil. But until that happens, I would keep my expectations rather limited. Now, platinum moved lower in sympathy with gold and silver as well. Of course, nothing in comparison to the massive moves we saw in these two metals. But in any case, I'm still monitoring this descending channel, with 950 being a key support area. If we hold this channel and this corrective type of pullback, then platinum is likely to be much closer to a tradable low than the opposite. Also notice here the bigger side divergence so far, right, between that low and this low, if we assume that we found a low
Wow,
with
yeah.
the
I hadn't noticed that actually.
with the move lower and the rebound that we're seeing. Actually, platinum, oppositely from gold and silver, has turned positive on the day. Of course, on the other hand, it didn't have that unbelievable collapse lower, but in any case, it was significantly lower, and it's now positive on the day. So I'm going to find it extremely interesting if gold and silver actually manage to turn positive on the day. I doubt it, but you never know. I mean, if after such a huge sell-off they manage to close positive on the day, I'm going to actively start looking for longs immediately, because that's going to show that
I
there
agree
is
with that 100%.
a lot of fundamental interest in buying at lower prices, right? And perhaps whoever did this move, and for whatever reasons they did, they're going to end up having produced a very significant tradable low if all they ended up doing was stimulating the interest that people that were anyhow monitoring closely and looking for a good area to buy precious metals. So yeah, for me, the focus of the day is clearly going to be gold and silver and what they end up doing. Now, having to do with the FX world, so far it has been today. Of course, it's early on the day, but since Sunday night that the markets opened, the FX market has been more or less indifferent to whatever developments with gold and silver or whatever other type of rumors. We see indecision candles across the board, pin bars, spinning tops, and these kind of candlesticks so far. Apparently FX is consolidating. So nothing much different than what I said on the morning edge on Friday, having to do with FX, and the same applies to indices. Indices, for example, the S&P closed at all-time highs on Friday, exactly on top of this 127% extension of this little pullback. We're still trading within an ascending wedge. We're still seeing divergences, but neither of that is enough to get you to fade these type of moves, because as I've been saying before, I wouldn't even be surprised if these moves end with some kind of a parabolic move higher. That's going to, in essence, put the nail in the coffin of such a massive move higher following the COVID sell-off. So still in wait and see mode here. Same applies to the Nasdaq, right? A little bit of a shorter term, but an ascending wedge nevertheless here also. After having broken out from another ascending wedge, much less steep. Also noticeable RSI divergence here. Here it is. So, let's see if we can get some type of a sell-off before the summer period is over. Now, DAX, somewhat of a similar pattern, a little bit underperforming the other US indices. You can see the angle of the move higher in the case of the Nasdaq, of the S&P, nothing in comparison to what we have in DAX. Nevertheless, there is absolutely no technical reason to fade the DAX as long as we trade above like 15,000, right? So yes, somewhat underperforming on one hand, but should you fade it just because of that? No, you just shouldn't be buying it in comparison to other assets if you're really persuaded that you should participate in any of these markets to the long side and you want to chase them, after such huge moves that have already happened during the past few months. Let me see if there was anything else I want to talk about. Yes, USD yen actually, and 10-year yields. I want to revisit them. We talked about them on Friday, but I want to revisit them. USD yen seems to be breaking above this descending channel, and I want to see a little bit of a momentum pickup here. But if we do see, there is a good chance that we've already finished this type of a corrective move lower. And what is definitely going to help with that is going to be a breakout and the triggering of this double bottom, right? We talked about it on Friday about the potential of this being a double bottom, and that's going to be the first sign that the 10-year might have bottomed. We need to see a break above, what is it, like 132 roughly. That's going to open the door for a move towards this channel trend line resistance, which passes from 145. And I think we then break above 145. And there is a very, very good chance that we are going to be on our way to a push to higher highs. So to a push above 1.8%. Having said that, keep in mind that we're currently on resistance, right? Because this this rectangle has not been broken yet. That's why we haven't triggered the double bottom yet. So, from a technical perspective, I would understand if somebody really wanted to fade this by shorting here, you would be having a very, very appealing risk-reward ratio. Now, needless to say, fundamentally speaking, I find it impossible to persuade myself in being short yields where we currently stand, despite knowing all the manipulation and the biggest buyer here are central banks, so on and so forth. In any case, I can't, my brain cannot give a command to my hand to execute any such a trade. Okay, just to be very, very clear. So there's no chance I would be selling yields where we currently are, with inflation being where it currently is, with the fiscal positioning of the US and the vast majority of developed countries being anywhere between bad and horrible. Yeah, no, I'm not going to be doing that. Amira is asking about natural gas, by the way. Sure, let's have a look at it. So here's natural gas, slight pullback, but really nothing that invalidates the overall trend we've spoken about. Now, we are seeing RSI divergence here for quite some time, and yes, at some point we have to see a pullback. This is what I drew a long time ago, and I haven't changed it. So, of course, I took into account the eventual deeper pullback, which is going to happen. It might happen from there, where I drew it like 4.5%, but yes, it might even happen from lower levels. So no, I wouldn't be chasing natural gas higher here if I had no position. But on the other hand, if I was long from the breakout from over there, as we spoke, I wouldn't be closing my position just because it has failed to propel itself higher during the past 3 days, right? I think we need to see a much stronger indication to say that some kind of a deeper pullback has begun, in which case I would also be looking to buy the dip, right? So I do think that natural gas is going much higher from where it currently is. It just might not be doing it from where we currently are, but it might need to do it from lower levels, right? And the same thing, the exact same thing, different timing applies to crude oil, right? We had been saying, when we were approaching the highs and after we found the highs, that listen, crude oil is going much higher, but yes, there is a good chance it's not doing it from where we currently are, right? And we've now seen this corrective move unfold, and it might have a little bit further to unfold, but I think that doesn't change the bigger picture. And the bigger picture is that I think we're going much higher. We just might need to take more time consolidating the amazing gains we had since finding a low last April, right? In the continuous, we moved from 11 to 77. So literally, we multiplied by sevenfold from the lows, right? So yes, after such a huge move, at some point you need to have a proper corrective move before you can, market conditions can normalize, and then you can have, buyers stepping in and feeling that they're buying at an at an appealing price, right? Because chasing a move that has taken anything from 11 to 77 and chasing at 77 is obviously not the smartest thing to do, right? Anyhow, yield. We have to keep redrawing this thing because it just refuses to break out properly. But you see that we're still coiling and coiling and coiling, right? And at some point, this will have to end. So there you go. Nothing yet, right? Resistance clearly at, what is it, 70.30. Support at 67.70. At some point, we need to break out, and I think we're going to see follow through. Okay, guys, girls, anything else? Go ahead. What do you want us to look at?
Oh, we've covered quite a few things. Ah, there you go. One more.
A
Let's do
riot.
one more. We want to cause a riot.
Yeah, there it is.
What is riot?
I have no
Blockchain.
clue.
Oh,
oh, yeah.
that's correlated with the Bitcoin, basically.
Clearly, it would be, I assume, but I don't think it's out of the woods yet. I don't think it's out of the woods yet. I would be careful over there, right? Because this might be a corrective recovery. Keep that in mind.
By the way, Steve, we had the Jolt's job openings came in at
I saw it,
just over 10 million. So better than expected. Yeah. Better than expected. Revision also higher. So, overall, not a bad number.
Moderna keeps being a beast, mate. I've run out of upside targets to give you. Upside targets make no sense anymore. So what can I say? I won't be fading it, but I think for anybody to buy it after this move, it's kind of crazy, right? So that's what I think about it. Clearly remains extremely bullish, but this move has reached now the point that it's become parabolic, and parabolic moves have the tendency of having parabolic type of pullbacks following that. So at some point, I think there's going to be some kind of a sharp corrective move lower. But should you be trying to catch such a move you know, by going short this. No. So yeah, it is what it is. It's a very strong bullish trend, but you know, we've gone too far, too fast, and yeah. NVAX attempting to break through this rectangle and trigger what we talked about some time ago, another leg higher, which points to 300, right? Oh, sorry, what the hell am I talking about? Sorry, I'm completely blind. I didn't see that on earnings. We had this gap lower, so in essence, we invalidated this semi attempt to break out. So we're back within the rectangle. So nothing. Still trading the rectangle, trapped in a range. We are exactly in the middle of the range. Exactly, right? There we go. We are at 200 and the range is between 150 and like 230, 240. So yeah, nothing to do yet. At some point, we're going to break out. 300 is the upside target, roughly. Or was that randomly chosen? No, that was randomly chosen. So let's see. Exact targets. Targets 290 to the upside. $105 to the downside. That's it. So, you know, either of the two is going to happen, but as it seems, not yet. What looked like an attempt to break out was shut down by earnings. I'm assuming that earnings were not that good. Yeah, so it is what it is. What is I? Oh, we had a look at that some time ago. I said that it's probably breaking higher. It did so. So yeah, keep looking higher. Now upside targets, we can fib extend this. 55.60, 59.40. These are the next two upside targets. And nothing to add than what we had in our prior analysis. Yeah, momentum is definitely not astonishing or something. Perhaps earnings, though, which as I see are just a few days away, managed to produce the momentum that's currently missing in this move that seems to be, you know, a little bit reluctant, right? Yield, not this. It is in Australia. And look at the weekly. Look at the weekly. Yeah, the weekly points to exactly what we've been saying, because the weekly trend was like, you know, clearly higher, right? And this was some type of a corrective move. So yeah, doesn't change the weekly outlook. I mean, the weekly outlook also points higher, right? Now, what did you say about Guild? Not that one, the one in Australia. Let's see. I don't see one in Australia. I don't see what you're talking about, mate. I in Australia. Okay, I thought you meant Guild. Okay, I. This one. Oh, what the hell is this? Yeah. Oh. Yeah, this is some kind of a lottery ticket. I know you like those. This looks like some kind of a lottery ticket. Something that's battered down over time amazingly. Listen, technically speaking, it looks like it's, you know, something is changing here, right? We built some kind of a bottom. We finally seem to be having overbought conditions in RSI. We seem to be getting like a vertical type of move higher. Yeah, there is some kind of a breakout happening here, right? First target here is this one, 47 cents. Yeah, 47 cents. Oh, come on. But I think for the bigger picture to change, we need a break above this trend line, right? But in any case, I think we might be on our way to 47 cents.
Awesome. Well done,
In the
Steve.
weekly. I don't think anything is going to change in the weekly, but yeah, I already saw that. Yeah. Yeah. So, you know, it's a big bet here. Oh, clearly you can see that, right? And we have earnings coming, you know, 3rd of September, if I see right, 2nd of September. So, you know, that might actually be the catalyst for this move to extend higher or to fail, like whatever produced that kind of spike higher, which tells me there is a lot of speculative interest in this one, but on the other hand, a lot of, a very limited amount of liquidity. Yeah.
Great.
Okay, guys and girls.
Thank you, Steve. Thank you, everybody.
Thank you, Stel.
And we will see you all
tomorrow.
tomorrow.
Bye-bye.
Thanks. Bye-bye.